Well, there is an earnings reporting season going on right now on the Wall Street. And the good news is that many companies are giving positive surprises from the result perspective. You saw Tesla, and then came Intel, which has gone into black, into profit after consecutive quarters of loss. Microsoft a little bit disappointed the market because it's Azure, the cloud revenue kind of declined, and the market did not like it. And recently, Meta platforms, basically Facebook, that's the new name of Facebook as all of you know, has given a fabulous result. Yes, since Facebook changed its name to Meta Platforms 1.5 years ago, investors and the market was hating it. Yes, you heard that right. The name Meta was getting hated. But now, with a good result and good prospect, everybody is loving the name Meta. Hello everybody, and welcome once again to Synanomics, the money machine. By now you have understood I am going to cover Meta platforms, or Facebook as it was known earlier. Meta recently reported its quarterly earnings and the result was fabulous. First time since 2021, it has shown a growth in the revenue. So it reported a revenue of $32 billion in Q2 versus 31.1 estimates. And this was 11% growth year over year. From the net income perspective, it actually reported $7.8 billion, which was 16% growth year over year. And guys, from the earning per share perspective, EPS, it actually reported $2.98 earnings per share versus 2.91 estimate. And that was also pretty much 21% increase year over year. Even from the daily active user perspective, its daily active users right now are 2.06 billion, which is 5% growth year over year. And if you talk about the monthly active users, that's pretty much 3.03 billion users, and that also has grown 3% year over year. And if you look at the ad revenue, which actually forms 98.5% of the total revenue of Meta, that has gone up 34%, a whopping 34% year over year. Yes, you have heard that right. Ad revenues have gone up 34%. They call it ad impression revenue. It's gone up 34% year over year, and the cost per advertisement has come down 16%. So pretty much going in the right direction, guys. Again, if you look at the balance sheet, from the balance sheet perspective, it has a cash and cash equivalent of $53.45 billion. And it had a free cash flow of almost $11 billion, 10.96 billion to be precise. So looks pretty good from the overall growth perspective, looks pretty good and solid from the balance sheet perspective. And let's look at what it's doing right, by the way. So it has actually cut the cost. It has cut the headcounts. At the same time, it has cut the capex. Yes, you heard that right. Whereas others like Alphabet is keeping the capex same, capital expenditure same, and Microsoft has announced a 40% increase in the capex. Meta, on the other hand, has been decreasing, which kind of looks like the right thing to do, because the last year almost $30 billion capex, pretty much it invested in the metaverse. And this year, they have actually reduced it down to 27 to 30 kind of range. So they'll have around 10% cut in the capex. So the guideline given for the whole year is 27 to 30 billion dollar. And they will invest heavily on the AI, artificial intelligence, and they will cut down on non-AI developments, which was welcomed by the market as well. And metaverse, as As I talked about last year, it spent almost $30 billion pretty much in the metaverse. And guys, I will have a separate topic to cover metaverse. It's kind of a little bit complicated and longer topic. But for the time being, just imagine cyberspace. And that's what metaverse is all about. Cyberspace looks very generic. Metaverse actually looks like it's embedded to a particular technology. So Meta is pretty much bullish on the metaverse. What it will do in reality, it will be pretty much based on the augmented reality or the virtual reality. So it will also have the digital markets, etc. So when you'll be purchasing stuff, you'll just feel it in the 3D as part of the virtual reality. So this whole concept was a little bit dying down, but after Apple has released its Vision Pro, it has got rejuvenated. And even Meta has been working on the headsets and all of those. But having said that, guys, the hardware section or hardware segment of Meta has declined 40%. Yes, you heard that right. 40% year over year. But having said that, Quest also had a $4 billion loss. But guys, as I mentioned earlier, 98.5% of the revenue comes from the advertisements. So this hardware revenue is kind of very tiny. It's kind of the rounding error, I would call that. So don't worry about it. The ad revenue is growing 34%, and that's pretty fantastic. Now, if you look at the growth going forward, again, they have actually announced that Q3 will be pretty much in that range, $32 to $34 billion revenue. They have not given the earning per share guideline, but from the capex, as I mentioned, they're going to reduce it down to $27 to $30 billion, down from $30 to $33 billion guidance they had given earlier. So good reduction in the capex in the areas which is not required, kind of non-AI areas, is pretty good from that perspective. And from the headcount perspective, pretty much I think it has cut down almost its 10% headcount, which the market always loves headcount, though it's very difficult for the employees, but the market loves it. And the stock price has been kind of going up pretty much 10-12% in the last 1 week. And actually it closed last night on Friday at $325.48 after hitting a record high of $326. Well, let's analyze the results actually. Let's analyze the company from the financial perspective and from the investment perspective, guys. So if you look at Meta as part of the Magnificent Seven, it's one of the cheapest stock today. Yes, you heard that right. It's one of the cheapest stock of the Magnificent Seven. And from the market cap perspective, it's pretty much at $840 billion. So another few dollar point increase in the price, it will hit $1 trillion back. As I was coming back to the valuation perspective, is still the cheapest. It's trading at 20 times earning of 2024 and 23 times earning of 2023. Whereas if you compare with others like Apple and all those, they're pretty much at 30. So from the valuation perspective, this still looks quite a decent opportunity to purchase. Very, very nicely priced. And looking at the outlook and the result right now, there has been heavy upgrades by the analysts. Morgan Stanley has increased the price to $374. Goldman Sachs, they've increased it to around $384. Citi, $385. And Jefferies have gone even further up, and they are actually giving a price target of $400. Guys, from 325 to 400, I mean, that's a big growth opportunity from the pricing perspective. And as I mentioned, still priced It's pretty much in the sweet spot, 20x. The whole S&P 500 is trading at 20x multiple, guys. And this is pretty much like that. Doesn't look like it's a tech company. The whole tech companies are actually trading at 29x 2024 earning. So from that perspective, it's pretty cheap investment. And I personally feel that, given the new development that's happening right now, especially the thread I'm talking about, the Instagram's thread, which has actually gained kind of a whopping million users out there very soon, and is giving a big competition to Twitter, or now it's called X platforms. But Mark Zuckerberg actually said that they're not going to monetize it right now till he sees the run rate of 1 billion users. So Thread is not going to actually make any dent in the earnings of Meta, but that's another opportunity going forward. If not now, maybe a couple of years later. So with that, I personally feel that it's a great opportunity to have this stock in your portfolio. Having said that, guys, remember, this is my personal opinion. Don't forget to consult your financial advisor before making any investment decisions. Sinhanomics is out there to create financial awareness so that you can analyze your companies and make your own decisions and make money. If you like this kind of content, please don't forget to like, share, and subscribe. With that, it's a goodbye from your friend Pankaj Sinha. I'll come back again with another interesting topic. There has been plenty of companies reporting their earnings, so I'll cover them one by one. Till then, it's a bye.